Hi, I'm Matt Copenheffer with the Motley Fool, and today I'm talking about Warren Buffett and the most unappreciated part of his genius. So Warren Buffett is generally known as a really great stock investor, and it's good that he's known that way because he really is a very good stock investor. He's made a lot of good investments in stocks over the years, both before he ran Berkshire Hathaway and then since he's run Berkshire Hathaway. However, I think one of the keys to Warren Buffett's big success, and when I talk about big success, I mean the fact that Berkshire Hathaway, the company that he essentially built, is worth billions and billions and billions of dollars today. Where that stems from is the fact that way back when, decades ago, Warren Buffett bought Berkshire Hathaway. Back then it was a textile company, and it was at a time when textile companies were not necessarily doing all that well. It was a challenging business. And Berkshire Hathaway as a textile company was in particular not doing well. It was losing a lot of money. On paper at least. However, the business was also producing a lot of cash. So for accounting standards, it was losing a lot of money, but on the cash side, it was bringing in a lot of cash. And what Warren Buffett realized he could do was that he could take the cash that Berkshire Hathaway was producing and invest it elsewhere. So he invested some of that money in stocks. He went and bought other companies with that cash, and then he used the cash that those other companies produced, and he bought still more companies, and he bought more stocks. And one of the things that he realized pretty early when he was doing this is that if he bought insurance companies, part of the business of insurance is holding cash for other people until you need to pay it back out. The beauty of that business is that if you run the insurance business well, you can actually make money on the insurance, and then you can make even more money by investing the money that you're holding on to. So essentially, Buffett went out and he bought insurance companies for Berkshire Hathaway, including Geico, the giant auto insurer that we all know and love with the gecko. So he bought all these insurance companies, got all of that cash coming in, invested it in stocks. And remember, we know that Warren Buffett is a very good stock investor, and he made a lot of money for his investors, made a lot of money for Berkshire Hathaway, made a lot of money for himself. And he did this because he had the innovative idea to take all of the cash that this company was making and invest it in the best places he saw fit.